Hello everyone, I am Pratap here. We are at part 4 of lesson 25. So this is about having more examples on TCO zones, that is trend change horizon zones related to swing trading. Some of our members would like to know the behavior of trend change horizon demand and supply zones in swing trading related setups. That is monthly income trade and weekly income trade setups. And also you should know this lesson is having dependency on the earlier lessons. You need to complete the earlier lessons before you get into this. And all the earlier lessons are available at our NeoStock YouTube channel. And all the lessons are available in a separate playlist, supply demand zone price action. So you can access the playlist from our NeoStock homepage. There is a tab called post. Some of you might be seeing the tab community. Whichever the tab you see, you click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all our training lessons. You just click on the link. Now we are into the supply demand zone price action course. So you need to start. If you are a first time learner, you need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one. And then you can get into our most recent lesson 25.4. And also please understand, we are also having a Telegram channel. I have provided the link to our Telegram channel in this video description. So from the video description, you can find the link and please join at our Telegram channel. It might be helpful to you because each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Okay, now let's get into the examples. The first one is a monthly income trade bullish trade setup. Let us understand the behavior of trend change horizon. So I have selected the stock Page Industries. So let me go to the in MIT. The trend will be in monthly income trade. Trend will be in weekly time frame, and the daily time frame is your entry zone, LTF zone. That is our entry zone, daily time frame. But weekly zone, you need to look for the trend changes. So that's why I'm going to the weekly time frame. See, earlier the prices were coming down. While going down, many of these demand zones are violated, and finally by the time prices reached in this area, the trend is a downtrend. So you all definitely will agree by seeing the price action. Definitely trend will be downtrend by the time a demand zone is created here. See, here you have a ERC candle, 2 base candles, and then a rally candle. ERC candle can be used as a leg-in. You already learned. So now I can draw a zone like this. This is the weekly demand zone. You should also notice there is a drop base drop here. Let me drop. This is the weekly supply zone. See, first time what happened, this weekly supply zone is violated after prices reached here. The trend was the trend was a downtrend. Now the downtrend is changed to sideways because of the supply zone violation. Because supply zone is violated, let me delete this. Because supply zone is violated, this weekly demand zone is a trend change horizon. This is a TCO demand zone. So definitely we agree this is a TCO demand zone because this drop base drop was violated while creation of this TCO zone, maybe while creation or after the creation next following candle. Anyway, the one zone has to be violated. Now the trend has to be changed. See, after reaching here, trend is changed. See what happened after that. Next, again prices retraced into this zone. If you go to the daily time frame, definitely you would have got an entry in the daily zone. Look into this. Here you can consider this is the drop candle, is a ERC candle or failed ERC, whatever it is, a leg-in. You can consider this as a leg-in. Maybe some of you may not be convincing, or you may say this is the failed ERC candle, could be a leg-in because this is even larger. 3 base candles and rally, that way you can consider. But this is okay because many times the actual order flow is started in this area. Within this area you have the actual order flow. See the leg out, the prices came and rejection and then started moving out. So that is the reason why I consider this is a leg-in. This is the base and this is the low of that zone. So now we can draw a daily demand zone. So within this daily demand zone, you can take the entry, or if you want to, if you feel the risk is high, still you can fine tune and you can take a trade. But many times when you fine tune, you might be missing the trades when prices are retracing immediately to the trend change horizon. Is the retracement, because initially trend change horizon is the high liquidity zone, high priority, high liquidity zone. It will work like once a new demand zone is created on the weekly time frame, then this will be converted to low priority, high liquidity zone that we discussed in our previous lesson. So go to the weekly time frame. Without creation of the new weekly demand zone, prices retraced into this zone and we got an entry here. And then prices were started moving up, moving up, moving up, moving up. See how much profit it would have given. At least where we can exit the next weekly supply zone. Here we are seeing a drop base, a drop weekly zone. Probably here. Maybe this also you can keep part of the base. This is the medium size candle, leg out. Or you can also draw like this because the actual movement started from here. So either way, it's all depending on your experience, you can draw the zone. But see here, this is the way I am drawing the weekly supply zone. See here, we took an entry here in this weekly zone at fine-tuned daily zone. Because why fine-tuned daily zone? Because the daily zone is your entry time frame for monthly income trade. Monthly income trade, your entry zone is daily. But what we are doing, we are targeting up to the weekly supply zone. This is the advantage of trend change horizon. You are taking the early trade. You are ignoring the daily supply zones. And you are keeping your target up to the supply zone. And moreover, this is working like a high liquidity weekly supply zone. Next time when prices reached here, you would have exited. How many weeks you holded the position? This is the first, second, third, fourth, fifth, sixth, seventh, 8, 9, 10, 11, 12, 13 weeks. 13 weeks you holded the position. 13 into 7, how many? 21, 7, 9, maybe 90. 97 days you might have holded this. Over 3 months you might have holded this position. Around 3 months or a little over 3 months time you would have holded this position. How much profit you would have got after 3 months? Maybe you would have taken a entry on the daily zone. Here you would have taken your entry. And in this weekly zone you would have exited. First let us look into the weekly, because you should also understand the profits, then only you really understand the value of this trend change horizon. Okay, here close of this candle is our target. in the supply zone. What is the close? 41,978.20 paisa. Let me take the calculator. $41,978.20 minus your entry is in this daily zone. Let us assume the fine tuned daily is your entry. Here you would have taken. So the open of this candle is your entry. That is 34,117.20. 34,117.20. You would have got 7,861 rupees on one share. Just single share. But what is the lot size of Page Industries? Let's assume you took a trade in F&O segment. Page Industries. So into 15. You would have got 1,17 rupees 915. That means close to 1,18,000. You would have got the profit in 3 months period. At present, what is the future margin cost of this particular stock? 1,12,000. Maybe at the time when you have taken, probably this could have been maybe around 95,000 or 90,000. The future cost would have been maybe around 90 or 95,000 or close to 1 lakh. That means within 3 months your money is doubled. And who gave you this profit? TCO, Trend Change Origin, has given this much profit. You carried the position till the next supply zone, the high liquidity supply zone. Hope you understand. See, whether it is the hourly income trade TCO zone or daily income trade TCO zone or monthly income trade TCO zone, the concept is same. It does not change anything. But only thing is the duration you are holding the position will be changing. Especially swing traders will be having a lot of patience. And intraday traders will not be having patience. Do they hold the position for 3 months? Definitely not. Because their trading style is different. If an intraday trader is also a swing trader, probably they will hold. Because they have the mindset to manage both the situations. But a pure intraday trader, he cannot hold. Let's look into the another example. PNB, Punjab National Bank. This is also MIT trade we look for, but a short trade. You see here, what is the trend of this stock by the time it reached here? Definitely uptrend. You will agree, right? The prices were moving up, moving up. It might have violated all the supplies in between. Definitely trend would have been uptrend. See here we have a rally base drop is there, and also you have a rally base rally is also there. And this was the first demand zone violated. This is the weekly demand zone. How it is violated? A new supply zone is created, rally base drop. weekly supply zone. Yeah. This weekly supply zone violated this zone, and now the trend is changed to sideways after a huge movement, after a long rally. After a long rally, this was the first time the zone is violated. So now definitely trend is changed to sideways. Who is the reason? The reason is the supply zone. So this supply zone is the TCO supply zone, trend change origin. After that, you see, prices again retraced back to this zone. And where generally you plan, because this is a monthly income trade setup, because in the monthly income trade, the trend will be in the weekly time frame. Because weekly time frame, the trend is changed. So what you will be doing, you will be taking your entry at daily. You have a rally candle, 2 base candles, a drop candle that way. Either you can draw, or still you want to minimize the risk, you can also draw a zone like this. It's all depending on your risk management. Let us assume, because this is a daily supply zone. Yeah. You can also draw like this. If risk you feel, if more, you will draw zone like this, or maybe further you will draw. It's all depending. Or you further fine tune in this area. That is the way you will be planning. But let us assume here we are taking a DIT trade. So here you have, again let's go to the weekly time frame. The next weekly zone is available here, rally, base, rally. This is the weekly demand zone. So you want to target up to this weekly zone. This is our target zone, and this is our entry. Entry is at daily zone, because this is working like a high priority TCO zone, because without creation of a new supply zones, prices entered into this zone. If a new supply zone is created, and then again after that the supply zone is violated, finally entered into this TCO zone, at the time the TCO zone power will be reduced. Now the power will be reduced to low priority TCO zone. Without creation of a new supply zone, if prices enter into this zone, the power will be like a high priority, high liquidity zone. In such kind of situations, you can target up to the next ITF time frame opposing zone. Here ITF time frame is weekly. The opposing zone is the opposing zone is demand zone, weekly demand zone. So you can target. So you go to the daily time frame. You got the entry. The next candle itself prices reached. You are lucky, because the elections declaration day, on that day prices came. If that action would not have happened, probably 2 days back the prices would have reached into this zone. Definitely this candle would not have been there if the elections declaration. But definitely, let us ignore this candle, time being. If you ignore, how many days it might have taken? When you got the entry on 3rd zone, and when it reached the target on 25th September. So 3 months again, another 3 or 3.5 months you might have waited. Another 3.5 months. Excuse me. Another 3.5 months you might have waited to reach this target. This is a completely lucky scenario, because of some volatility changes in the market, huge volatility changes because of the elections results declaration day on that day. But generally, except those events, many of the times it won't happen like this. But anyway, whoever has taken a trade on the TCO zones, they are the lucky people, because whatever the profit you are supposed to get in 3 months period, same profit you got in just 2 days. This is your entry and this is your exit next day. So such kind of trades are lucky trades. But anyway, let us assume where you would have taken your trade. What is your entry price? Your entry price would have been the closing of this candle 136.44. 136.44 minus, and here this is your weekly zone. In the weekly time frame, this candle close or high of this candle, whatever it is. So it is 103.28 paisa or 30 paisa, 103.30. How many paisa? Closing of this candle 28. Sorry, not closing. We made a mistake. The open of this candle you need to consider. Closing means this is the one, the open. Either open or high. 105.40. High is 105.45, whatever it is. 105.45. The high of this candle. Let us you exited. So you got a 30.99. So that means close to 31 rupees profit you got. 31 rupees profit. What is the margin cost of PNB? So 8,000. The lot size is 8,000. So 31 into 8,000. You would have got 2,48,000 rupees profit. And current margin is 2,11,000. And by the time you took your trade, probably it could be even more, maybe 2,20,000 or 25,000. Could have been its margin cost. And your amount is doubled in 2 days in this scenario. Go to the daily time frame. Here you got the trade, next day it reached the target. Because of the election results, declaration, the volatility changes in the market on that day. But otherwise, in a normal situation, it would have taken 3 months time or 3.5 months time. Within 3 or 3.5 months time, your amount would have been doubled. We have seen both the scenarios. Almost similar behavior except this candle. If you would have ignored, maybe slowly like this, 2 days back or 3 days back, price would have been reached the target. Every time it won't happen like this, right? See how the TCO zones are working in monthly income trades. Monthly income trade, bullish trade setup, monthly income trade, bearish trade setup, either whatever it is. You have seen the profits because you took an entry at the LTF time frame, but you targeted to the ITF time frame when this zone is having a high liquidity zone, high priority, high liquidity zone. Now next time prices reaches, this will be a low priority zone because already a new supply zones are created here. All these supply zones will be violated and then prices will be reaching. At the time the power will be reduced. But here, without creation of a new weekly supply zone, prices entered into this retraced. See, suppose there is a drop, base, again a drop. After that, prices reached this TCO zone. Before reaching this TCO zone, the drop, base, drop, what it was created, that has to be violated. And then only it will come here. So at the time, it will be, because the trend is changed, at the time trend will be changed. Because of that, the power of this particular zone will be reduced to low priority, high liquidity zone. Without creation of new supply zone, prices reached. See here, a drop candle, this zone is violated. The moment it is violated, it is a TCO supply zone. Without creation of a new supply zone, prices again retraced back to this zone. Because without creation of a new supply zone, prices retraced back. This will be acting as a high priority, high liquidity zone. After that, it gave very good profit. Let us one more example, last example. This time we will look into the example in WIT bullish trade setup. So I will select L&T Finance LTF. Okay, this is a weekly income trade. For weekly income trade, your trend will be in the daily. Weekly is HTF. We need not worry about that. So trend is on the daily and your entry time frame is 75 minutes. See here, prices were going down. And here again. By the time trend reaches here, it is the downtrend. Even if you calculate zone violation trend, you will see this is the downtrend at this stage. Because in between, twice it changed to sideways trend. And finally it reached to the downtrend. I am not getting into trend calculations, you can verify. Our focus should be on the TCO zones. Because this is the downtrend at this stage, the downtrend, a new demand zone is created, drop base rally. During the zone creation, see, maybe during the zone creation or after the zone creation, the next follow through candle, either thing is allowed. But here in this example also, during the zone creation, the leg out candle is violated this zone, drop base drop. This is not rally based drop because this is a medium size candle. This is a medium size candle is the leg in, base drop. This is the large candle. And this is the daily supply zone. And this is the newly created daily demand zone. And this daily demand zone violated the supply zone and trend is changed to sideways. And who is the reason for changing the downtrend to sideways? This demand zone, this daily demand zone. So it will be acting as a TCO demand zone. This is the daily time frame. And this daily time frame you want to use ITF. For weekly income trade, entry time frame is 75 and ITF is daily. And the daily trend is changed to sideways from downtrend. So now it is going to be a trend change origin demand zone. And what about your entry? Your entry will be fine-tuned this to 75 minutes time frame. Is there any 75 minute zone? Yes. Maybe with small entry buffer, your trade would have been executed here by adding small entry buffer. See, many times TCO zones are very powerful. Just before entering, the prices will be moving, especially when you are going to the more and more lower time frame zones. Before reaching the entry zone with some extra buffer, if you don't add extra buffer, you will be missing the trades many times, especially in lower time frames like 75 or below 75 time frames in DIT or in HIT. Definitely you need to add some buffer first time when they are entering into that zone, because the lower time frame, thus more and more institutional order flow will be very strong, because we are entering more deep into the more and more lower time frames. 75 itself is many people consider it as a lower time frame. 15 and 5 minutes means even further, more lower time frames. That's why in 75 and below time frames, when you are looking for this TCO related setups, you look for add some entry buffer. If the risk is within your limit, if the risk is beyond your limit, you can't do anything. Okay. So here we got the entry. And what kind of entry? Is it a high priority, high liquidity zone entry or low priority, high liquidity zone entry. For that you need to go to daily time frame. See, without creation of a new daily demand zone, it retraced back. Drop base rally is created. After that again rally base rally, and then it come. Now this newly created rally base rally has to be violated, and then it will come to TCO zone. At the time trend is changed. That's why the priority will be reduced to low priority. But is that happened here? No. Drop base rally. After that a new demand zone is not created on the daily time frame. Without creation of a new daily demand zone, again prices retraced back and we got an entry, and after that sharply prices were started moving up. So where you can plan the trade? So where is the supply zones? The next supply zone on daily time frame, that could be your target zone. So here you have a daily supply zone is available. You have a drop candle, two base candles drop. So this could be your daily supply zone. On 75 minutes you take the entry. This is the 75-minute zone. And in daily time frame you look for the target. Daily time frame. The type 1 proximal, it reached the target here in this candle itself. So when you got the entry on 11th September, and when it reached the target on 13th September. So this is the daily demand zone, TCO demand zone, and this is the daily supply zone. Within how many days it reached? This is the first day, trading day, second, third. On the third trading session, it reached the target. Generally, it takes a few weeks time. But this time lucky, because sharply prices were started moving up. So 11th September we got the entry, and 13th September it reached the target. 11th September, what could be your entry? Maybe if you would have added some buffer, the low of this candle is 165.66, maybe at 165.80 paisa or 90 paisa, you might have taken the trade. $165.70, let me add. The least level I am adding, least level buffer, but generally in practical you will add some extra buffer. Here my intention is just how much maximum profit we got from this. That we want to see. But in real profit will be less than our calculation parts. Okay, what is the target? The low of this zone. What is the low of this zone? 178.96. So let us say rough value 178.95. 178.95. Okay, 13 rupee 25 paisa profit we got. And what is LTF lot size? $4,462. You got 59,121 rupees profit. Within how many days? 1, 2, 3. In 3 trading days. First trading day, took the entry. In between, you waited for 1 day. Next trading day, it reached the target. In 3 trading days, you exited. ₹59,121, rough value 59,000 rupees profit you got, the rounded value. And this is your WIT trade, weekly income trade. Generally it takes few weeks time. You need to wait, but this time maybe it is lucky. Sharply price moved in this candle, next candle with gap up, reached the target. This is how the TCO zones behave when they act as a high priority, high liquidity zone. Previously you have seen examples in hourly income trade because that was very easy for me to explain the concepts. Because the entry, exit, everything happens in a single day. But to show you these kind of examples, so many days we need to wait because it will not reach the target immediately. But still hope you people understand how exactly these concepts are working even in swing trading related concepts or positional trading related concepts like WIT or MIT related income trades, monthly income trade, weekly income trade setups. Hope now you got better understanding about these concepts. So hope the swing traders will be happy with these examples. Okay, if you have any questions, put them in the comment section. Let's all meet again in our next lesson. But next lesson I am yet to plan, yet to decide. Once it is decided, then I will be planning my next lesson. Okay, thank you for attending this video. Let's all meet again in our next video. Thank you.